8:30 a.m. Monday evening bell. Let's get started for today's Pulver Report. We know there's risk in trading. Please always use trade capital only. You know the deal there. Follow me on social media. Best place to find me is here, youtube.com/Chris Pulver. Verified accounts, Instagram and Twitter at Chris Pulver. Just make sure it's really me. You know how to get me. I'm in my Discord channel. You can leave me a comment here on the YouTube channel. I will never, ever send you a direct message soliciting something that sounds ridiculous. It happens a lot, unfortunately, so please just make sure you find a way to reach out to me, which I'm giving you all these outlets, and check with me, because I'll probably tell you, nope, it's not me, this is me. All right, let's jump to the charts. So we have a busy week ahead. A lot of U.S. data to digest. Let's take a look at that. So we're trading at 459.53. Market is open slightly lower than where we closed on Friday, the push up. Congratulations to the S&P 500 for just eclipsing the highs briefly for the year. So previous highs back in July, now we have highs right here. We go to the DIA, the QQQ, same type of thing. You can see that they are well above, right? So the DIA closing in on all-time highs has eclipsed these summer highs by quite a bit. And looking like there's a big rotation into value right now, possibly out of tech. We'll see the Qs. Same thing. I mean, the DIA has overstretched that July high versus the Qs. So still have room to get to the highs, but interesting to see how this week plays out. Is it noise this week, or is it path of least resistance? We're going to find out. And what news do we have this week? You should know. Big news. We have 4 major rate decisions. We have 2 major U.S. Data points, one of which is CPI. I guess I get to circle a little bit more here. So CPI news on Tuesday morning, 8:30 a.m. Markets forecasting 3.1 for the year over year, and slightly one tick higher on the core CPI, and then the month over month the same. So I took a look at the Trueflation reading right here. Looked at this last night. And if we go into the US inflation rate, a lot of chop right in here. So recent lows, I mean, again, this is not the same thing you're going to see on the calendar tomorrow. This isn't the same thing you'll hear Powell possibly reference on Wednesday during his press conference at 2:30 p.m. So lowest at 2, we've pushed up a little bit higher. Right now it's anticipated at 3.07. Again, this is not the same type of reading. There's core inflation, there's super core inflation or super inflation. But what I'm going to be watching this week is price action and what is the result after CPI prints on Tuesday morning. And then our Fed funds rate is expected to be a pause on Wednesday. 2 p.m. is a rate decision. 2:30 is the statement of press conference with Powell. Taking Q&As, see if he says anything the market likes or doesn't like. And again, how does price action push the day to close on Wednesday? And the way I'm anticipating a lot of movement this week is possibly volatility up or down. We're going to see if there's a continued holiday drift to kick us into the rest of the year. Is it possible that the market uses this week as an excuse to continue to push higher? It's possible. Is it possible that we have a correction? Yep. All these are possible. And it's just funny. We have all these, sessions, and we spend all this time together in the trading rooms. And a week like this, it's like, look, I could see price spiking to hit this level. I could see price making a run to these highs. Are we going to get some crazy movement that's an outlier with volatility? I don't know. Yes, no, maybe. The last couple weeks have been very quiet, right? Maybe $5 to $7 of weekly movement, and that's about it. So, we still have our average. It's been up to as high as $13. This is the 14 period weekly average. So it's been as high as 13 and change. Now it's 10.52, but the last 3 weeks have dragged it down. So, if we get a $10 or $11 move, that's great. And where I'm sitting, have some trades in here for the SPY, have some trades in for the QQQ, the DIA, the IWM, and looking to see if price goes up or down for a strangle. Looking to see if I can pin a couple with some butterfly spreads, and looking to see how the overall portfolio does to take us into the rest of the year. All right. So it's going to be news heavy. It's possibly going to be the news that puts us into correction territory very quickly, and maybe there's a buy on dip, or this is news that just continues to be the catalyst to drive the markets higher. Anything that the bigger pockets can do to drive the markets up to finish the year on a positive note probably will be done. So I think that the path of least resistance remains bullish. Even if we have a big correction from Powell on Wednesday, I'd still be interested to kind of buy that dip into the rest of the year and see if we can revisit the highs once again, or even revisit all-time highs. All-time highs, by the way, in the S&P have been over 2 years. So if we roll into the end of December into the first week of January without making this high, that's a 2-year drawdown in the S&P, right? It doesn't feel as bad because everyone that was getting their butt kicked in 2022 has at least had a broader market recovery, but you're not back to the highs again. I mean, if you dollar cost average in here, possibly your portfolio is up in profit, but it's going to be tricky. It's going to be volatile, and there's still calls for bulls to continue to push the SPY up to 500 plus. There's calls for the bears to take us into one of the worst recessions since 2008. So pick something, right? It just seems like those are extreme cases we have to kind of settle behind the narrative, and I'm not buying into either one of them. So I'll just continue to kind of stay, week to week, month to month, and see how trades roll into profit. Currency strength wise, we have a big flipper on the Japanese yen overnight. So around 2:30 a.m., big drop in the Japanese yen for weakness, and we're getting pullbacks like we had the big push last week to the downside. So let's take a look at dollar yen. Go to the daily time frame, and let me jump into YouTube and say good morning to everybody. Let's see here. Yep. Good morning, good morning, good morning. We are live. Okay. Denise, good morning. Chris, good morning. FK, good morning. David, Ann, Jacob, good morning. Ruth, good morning. James, what's happening? Donna, good morning. Keith, good morning. Larry, what's happening? Let me move this down a little bit. All right, good morning, everybody. Website, which one you asking for there, James? Are you asking for Trueflation? Trueflation.com, that website. It's probably the one I was looking at. Let's go to the dollar yen. John, good morning. James, good morning. Gary, what's happening, sir? So here's the pullback I was talking about on the Japanese yen, currency strength overnight. So big drop, currency strength to the downside with the yen. We have the pound on top, CAD New Zealand on top, Swiss euro. Aussie's been just kind of hanging out sub zero, just under that baseline. But we'll see what the Japanese yen gives us for the remainder of the year, the early part of January. We've had a decent correction from 152 all the way down to 142, so about 1,000 pip correction on the yen. But what makes everyone, I mean, it's just a silly currency pair. It's like, we established 1,000 pips of direction, breaks all these previous highs in structure. We're at equal highs from last year's top that ended up dropping to 127. And it just doesn't give me any confidence that this is going to be a sustained move. So what I'd like to see is that this is a swing high, this is a swing low, we pull back into equilibrium, we fade a little bit, and then we look to see if this one heads lower. I mean, structurally, I'd like to see it. Stop loss is pretty easily defined, but in the carry trade environment, there's just something about this Japanese yen with the negative swap, the BOJ not changing policies, that somehow I wouldn't be surprised if this stupid thing just does this. Boop. Pokes those highs out again, and everyone trying to short it, maybe had a chance for that 1,000 pip move to get some profits. I have some swing trades in. We're looking at a swing trade in here with a stop loss above, and we're looking to see if it will head back down to lower lows. If that's right, awesome. If not, and we get stopped out of the highs, then I really will probably just stop trading the Japanese yen for a while. I'm so sick of looking at it and noticing that it's just going to be short-term alignments only. Trade what you see. Don't even try to get a swing trade in, because it's stuff like this where there's heavy positioning one way, then it just makes a big violent switch and swing the other way in favor of a weaker Japanese yen with a lower volatility environment because of positive swap. Right now, the Japanese yen has the lowest and the only of all the majors, the negative interest rate. So if they continue to stay with that monetary policy, it's going to be tough for the markets to ever strengthen the yen more so than a short-term move. So we will see. I put in a trade last week in the Flex trading room. We're looking at a pullback here on the New Zealand yen as well. So I want to see if the New Zealand yen would do high, low, pull back to about halfway, and then sell back off and see if we can get back down to these lows, possibly lower all the way back down here. Right? Is that going to happen? I don't know. But I'm willing to take that defined risk trade where, this is my swing. If we're right, we have bigger reward than risk. If I'm wrong, I get stopped out. I'll just stop trading the yen. So I traded like a third of the trade size just in case. So if I do lose on the dollar yen, New Zealand yen, I'll probably sacrifice about 0.5% of my account. So small trade sizes, which I think is key, especially if you're going to stomach a loss. All right, what other currency pairs we like? Let's look at the DXY, how this affects the dollar and the other currency pairs. Dollar so far is pretty quiet this week, and it's been quiet after a pullback the last couple of weeks. We had that big push in the dollar. In the flex trade room, we did pretty well. We were long Aussie dollar, long New Zealand dollar, short dollar yen, and we were long euro dollar, and we tried to get long pound dollar. I just missed my entry. So we took advantage of that nice little drop from the highs at 107 all the way back down towards 102 and change. At this point, I've talked about this last week. I don't think the dollar really has a clear direction unless you just wait. So dollar index this week, do we pull back into this pocket? I would say if you can see this 105.50 zone, 105.50 becomes some pretty solid technical support, becoming resistance right there. And so if we pull back into that area, I would look for a simple trendline break, see if the dollar starts to roll over again for maybe additional weakness. All right. A weaker dollar, I still think translates into a stronger stock market. So if we get another push on the downside for the dollar or a retest of these lows, that's probably the stock market's ability to retest highs and possibly drift a little bit higher through the holidays, maybe the next 3-4 weeks, even into the new year, right? But if the dollar pulls back and hits this 105.50 alert, I would say we're going to get some recovery on the dollar. We're back into maybe a swap environment where the dollar's getting some love. I still think this is a good broadening pattern that we watch for. Resistance, resistance, resistance here. Same thing up the highs at 107.50. And then broadening pattern. This is where the dollar has room to continue to plummet. So if we find this level of resistance and this dollar gets faded back down, there's room, to revisit major support, possibly hitting this round number at 100. I still think there the dollar looks for bid. So I'm buying the dollar here. I'll make it simple. I'm buying the dollar here. I am selling the dollar here with confirmation. I'm selling the dollar here with confirmation. In the middle, I'm going to wait for confirmation on price action and alignments. So don't have a clean direction right now. We have a lot of news to digest this week, so we'll let it play out. Oil. Oil trading at 71. I still think oil is subject to more downside, but if we start to stabilize like we did back here, this is March. Again in May, all summer long. If we start to stabilize in this $65 to $67 zone, I could see oil carving out some lows. Okay, carving out some lows in here, getting on the right-hand side of this trend line, and maybe working its way back up. I think range-bound oil makes some sense, but just be careful because global demand is certainly slowing. Okay, if China's been quiet, U.S. is slowing, global economy is slowing, oil is certainly going to take a bid to the downside. Gold and silver. Got to watch the dollar. Gold continues to push lower. Once we put in that top, it wasn't a huge surprise. That was a big, nasty spike to the upside for, I'm sure, all the buyers waiting to get filled at buy stop levels. They get filled, they get faked out from the looks of it. So could I see oil, gold putting in a bit more of a top? I mean, at first I was looking at the closer time frames. So daily, taking out the lows around 2030. If we go to a 1-hour chart or 4-hour chart, we've already been pushing lower. And we barely pulled back too, by the way. That is one thing I'd say is somewhat disappointing about that violent spike to the upside. It just was an aggressive crown. So this top, we came all the way down here for swing. If I put this swing lower, let me see what that fib looks like. It might have pulled back to a 236. Maybe. Like right there. Ugh, barely. Not even. Man, that's such a nasty turnaround. Anyway, I'm gonna keep my fib right here. So what I was hoping for on gold would be this. I was hoping we could at least find a 30 to 38% pullback in this area and then look to short it because the stop loss could be pretty tight. It just kind of broke the structure here, hit the same highs again, and fell. But what a violent turn. The dollar's been heading a little bit up, so we got the bid there. Now, like I said, watch the dollar index to see how we're going to trade gold. If the dollar index continues to push higher, then gold certainly has room to unwind more. Okay, go to a higher time frame. Go to the higher time frame, and we will see. I mean, here's where gold gets pretty wild. If we take out this low, if gold comes all the way back down here to take out this low around 1940, that would signal a pretty solid top where we have this huge range opportunity on gold. That could be a swing trade back up to around 2000, but failing. And then we have a swing trade where gold is just a big old reset and the dollar is back into an indecision zone. Silver has done the same thing. We've seen silver also have a big rejection from recent highs at 26, and it just continues to fall. Now, one thing I'm noticing here, just based on how price is falling, there's a big inefficiency there on silver as well as there. So if we keep falling, I will be looking for oversold conditions, maybe some equal levels, try to look for a trendline break and see if silver can get bid once again. But it might take a while, and price action wise, if I go to a higher time frame, it might be better just to wait. I mean, silver might not catch any real support until we find this level here, this level here, this level here, right? I mean, there's a lot of support, but this could drop as low as, I mean, $17.50 to $18. So there's $22 support, there's $20.50, sub 20, and then around $18. So we just have a big unraveling towards the end of the year. Silver and gold both have had a good run, but if you didn't take profit or protect profit near those highs, then you're just waiting. Let's go Bitcoin, Ethereum for a moment. Bitcoin finally getting a decent pullback, which part of me is welcoming because we had quite the stretch. We're going to see where this level gets picked up. I have chart alarm set at 38, chart alarm set at 33 and 32. I do want to buy some more Bitcoin. I just want to see if we get a decent pullback. So even if I took a fib from here, this recent run, so this low, this high, I look to see at least a 38% or a 50% pullback. So 38% puts me around 37 and change. 50% pullback pulls me around 35,000. So if I'm going to add some more, that would be like the dip levels I'd be watching. If I'm able to add some more on my position with a dip, I still like 48,000, and I would love to see 68 plus. I think everyone this year that's becoming a bull once again on Bitcoin would probably love to see 100,000 would be the next big spot number. We have potentially an ETF announcement coming as early as January of next year. We have the halving happening I think in March or April of next year. So it's again just it's going to be time, but we have certainly seen. I don't think we'd be talking about crypto as much as we are now if it wasn't for this big breakout above 32,000. If that didn't happen and we were still sideways, I wouldn't be talking about crypto every day. But the fact that we've broken the structure, it just shows like there's clearly some technical things happening. This high are up for grabs, right? So a decent run here. I'd like to see a bit of a pullback. Look for trend line breaks, look for confirmation. I'm looking to buy. And my next target is let's eclipse this high, and let's see where this thing wants to run. An ETF could certainly lead to some more inflows. It may not be, raw crypto. It might be more of just the holdings and the spots and the derivatives and layers that go on top of this, right? I mean, I'm in ProShares, which is BITO. I'm in GBTC, which is Grayscale. I don't know what the official ETF is going to be or what plural. There's going to be a ton of them. There'll probably be 5 to 10 Bitcoin-based ETFs that are out there if approved. And the real slap in the face would be if there's not any ETF approved, right? I mean, could this come all the way back down to, I don't know, 30,000? Sure, it could. But if the ETFs are approved, then this allows some pretty deep pockets to start rolling in without all the crazy, off-grid, off-exchange, when it's just more of like a widely accepted instrument under probably better regulations. So we'll find out. Okay. All right, that's a little Bitcoin action. Ethereum also getting a pullback. I like this level here, but I would wait for some confirmation. This is the daily time frame. We broke this high right around 2030 or 2040. Ethereum is doing a pretty good job of holding there. I like the possible add on Ethereum right in here. If you're willing to take a small exposed trade, like little buy trade on Ethereum, I wouldn't really have a stop loss. It'd be kind of entering area 1. My stop loss would be, down below, or just not a stop loss and just dollar cost average into it. But I like this area to add, at least have some exposure, because the run up, if Ethereum gets to the highs, where it's roughly the equivalent of like Bitcoin's 48,000. So if Ethereum gets to 3584, that potential gain from current price is bigger than what Bitcoin's run to 48,000 is. So it's about a 65% run on Ethereum, and the upside is also bigger. If we took Ethereum to the upside and broke all-time highs from current price, that is over 120%. And it's I think maybe half that on Bitcoin. So if we go to all-time highs on Bitcoin from current price, you're looking at around a 67 to 68% upside versus 120. So yeah, I mean, Ethereum has potentially double the performance ahead just by breaking all-time highs. So little exposure is not too bad, but risk capital, I keep saying that. Don't trade we can't afford to lose with crypto because who knows. But I like it. I'm willing to add to it, and we'll see where it wants to go. Okay. All right. Let's have a look at some other stuff. Let's look at the Mag 7. Amazon trading at 145. We have a bit of a dip in the markets today. Alcoa down to 24.98. That's not Mag 7, of course. Google, any pullbacks here? 132.95, pulling back. Meta, pulling back. Apple, 193. Recent highs have not. This is interesting, right? Apple has not broken the yearly highs or all-time highs. Not yet. I think this is the yearly highs. All-time highs, did we get higher than that? Nope, that was it. So Apple established the all-time highs in July of this year. I think that's correct. Or am I wrong? Yeah, those are all-time highs. Okay. So Apple has not eclipsed it yet. The S&P did. So did the Q. So did the DIA for yearly highs. So this could be the rotation I'm talking about. You know, we've had a great run. The market's been lifted and carried by most of the Mag 7 or the enormous 8, whatever you want to call it. You look at NVIDIA as well, in Tesla. Off the highs at 500 plus, trading around 470 on NVIDIA. Tesla trading at 241, possible some big channel trading here. Recent channel trading, look at something like this. I mean, if you connect the support levels or give it even give it an equal channel, and this is just more of like the outlier that was a bullish pattern here. So, nice crown pattern there to get that push to the upside. We could be doing the same thing again on Tesla, just building back up, accumulating, and consolidating. But again, a break above 280. I mean, what's kind of nice is there's some good structure here. Tesla, if we break above 280, I would assess the overall market, but 280 plus, I would be looking at these highs again at 400. That could be an enjoyable little run on Tesla. So, I think active trading, active management is going to be the key forward, in my opinion. The next 6 to 12 months, pretty active. I'll be doing a lot of options trading. All right, we got a trader from Mongolia today. Nice. All right, time to ask some questions. Any Q&A, any charts? I saw somebody with a NAS 30. Was it NAS 30 or US 30? That's Dow, right? Dow Jones 30. So we broke the yearly highs. We're coming into, I think we're within single digits of all-time highs. This is why I think that the rotation is happening. The rotation of value is happening over tech. Is it short term? Possibly, right? I mean, maybe this is the best way to get a hold. If you look at the holdings, I mean, look at your top 30 companies in the Dow compared to, the top 100 tech companies. Tech is led by 7 or 8 stocks, right? You still have higher interest rates, higher borrowing costs, higher debt levels. All these things are fundamentally a problem right now. You go to your Dow, I mean, you're talking about some of the biggest blue chip household names in the world. I think that at least in the near term, they're companies that are slightly lower volatility, probably higher dividend structure right now, better cash flow, and that's where I could see this kind of short-term rotation. So I think the Dow's going to do pretty well. I'm curious to see if the IWM has any love. This has room to play catch-up to revisit these range highs, but small cap is not doing great. If you look at the Russell, I think it's IWX is the top 100 or the top 200. Yeah, the IWX is top 200, and this one has performed. It's back up near the all-time highs. So it's been range bound, but you can see that the top 200 is just, again, like higher concentration, similar to the magnificent, 7, enormous 8. You just got like your top 10% of the stocks doing really well. So here's your top 10% of the Russell doing better, carrying their own weight, but not enough to bring the entire broader 2000 stock Russell up. So the RUT or the IWM still struggling and nowhere near these all-time highs. So I think that, what these companies do and make matters. Limited debt, good cash, possibly a dividend. Volatility, if you have high beta, low beta, I don't think that really matters as much. But certainly, if we're going into a lower volatility environment, I think you're going to see a lot of rotations in the household names, as opposed to just buy large cap tech. I mean, there's going to be a slowdown. The consumer is probably the biggest concern going into 2024. We had a big travel day during Thanksgiving weekend. We might have another big travel day coming up in Christmas and New Year's. But as far as spending, what's the holiday season look like? Are people going to spend a ton for the holiday season? Maybe. If they don't, it's going to be possibly the question mark of, is the consumer strong enough to carry GDP and carry everything looking forward in the U.S. Consumer is pretty powerful, whether they realize it or not. Ranging on the 4-hour chart. Yeah, I mean, it's been ranging for the last couple of weeks. So this is what I'm looking at on the Dow. I mean, that's your US 30. So for the next couple of weeks, and here's what I'm saying. I'm not necessarily putting a time frame on, I've got to trade for this week. I have a couple of expirations out, but I went out to the 22nd and the 29th to see if the market over the next couple of weeks can give us some movement. I think the path of least resistance is higher, right? That's the easiest way for the market to go after the trajectory was established back here early November. But a correction is certainly due. I mean, we have pockets like crazy inefficiencies to the upside. We've got pullbacks and overbought conditions, a lot of things that would cause a technical correction. But that technical correction to me is short term. So in a way, I'd almost like to see the Fed say something that the market's like, oh no, and then it's like, whatever, dude, just go. And we do that. Where the market finds some type of balance. I mean, the Dow pulling back to this level, I mean, that could be resistance becoming support in the short term, and then the market goes after and guns for all-time highs. So what I'd like to see at the very least is this is going to be broken, right? That tiny little range for the last couple of weeks with quiet trading on all the major ETFs. I'd like to see that range broken in some capacity, up or down. And so I'm positioned for that with a couple of strangles. I'm positioned that with some debit spreads and some long puts. So I will try to trade accordingly. And if we have pullbacks, I'll cash in on some puts. If we have breakouts, then I'll cash in on some calls. So I'm still positioned both ways. I'm not taking a huge bias. I'm just looking to try to play around some volatility. Okay. So, like I said, this is going to be a big week. I will be live on Wednesday for A1 Trading. Nick and the team usually have me in. I think it's going to be a 1:45 p.m. start. That'll be their YouTube channel and other stuff. I think they do StreamYard and YouTube. So that'll be A1 Trading on Wednesday, right around 1:45 p.m. or 2 p.m. Eastern time for FOMC. And then Friday, I'll be live on the 15th for 9:30 a.m. opening bell, and we'll do a little recap and see how the week's going. The next couple weeks, things are kind of winding down. I'm not done trading, but this full week of trading, next full week of trading after that, it's holiday time. So 25th through the 29th, disrupted by the Christmas Day, New Year's Day as well. So markets will be closed the 25th and 1st. Forex market's going to be open, but brokers have limited hours. So we're getting into that holiday trading. So just be careful on how you're positioning. No reason to take unnecessary risk. As I say during the holidays, trade what you see. Look for holiday drift. Look for directions. If it's indecisive, wait for a breakout. Once they start to break out, trends tend to drift for the next few weeks. It might carry us into the new year. We might have a December, January push. Trends are usually pretty friendly through the next maybe 4 to 6 weeks. Okay. All right, sounds good. Before you go, would you do me a favor, hit the thumbs up button for me if you're watching live or you check this out after the fact to watch the video. I appreciate the thumbs up. Like the channel and support the live sessions. That helps a lot. And if you have any questions, let me know. Let's see. Yeah. And I'll switch gears here to the Equities on Demand trading room. We'll talk about our trades for the week. And I appreciate everyone being here. A couple things just really quickly I'll post my Discord channel. I've got a couple links already, but I'll throw another one out there. So here's my Discord channel if you want to join. Come in and say hi. We have a free group chat. This is a place for me to house all my content. So anything when I'm posting YouTube videos, put my weekly blog, posting things on Twitter, analysis, education, private instruction. I'll also be posting some affiliate links, different brokers, different platforms I work with. and broker accounts. I mean, I'll start posting that in the next maybe a couple of weeks. As I go into next year, I don't know if I have any feedback. I'll ask right now. How many of you would like to see me live every day? Because I'm thinking we'll do the Mondays and Fridays like we are, opening bell, and then Tuesday, Wednesday, Thursday, what I'll probably do is some type of like, power lunch session or market minute. We'll do maybe a 30-minute segment or so, Tuesday, Wednesday, Thursday. So just for me to get some more consistency out there, try to get some more reach. Everyone that comes in, joins live, watches the recordings, likes and subscribes, all that good stuff. I mean, I think it'd be nice just to get some more awareness out there. So if it helps, great. Okay, what time on Wednesday? Let me see if it's in here. Let me check that with the team. So I'll just look for A1 trading. I know they're usually live every day, but we're looking for something on, let's see, that's watching live now. They might not have created it yet. I'll go to their channel, see if they have something coming up. Live now, market news. Not yet. So this will be the spot. I mean, if you search for A1 trading on Wednesday, it'll probably be 1:45 p.m. or 2 p.m. right when the news comes out. Okay. All right, sounds good. But I'll be live Friday again to wrap up the week. I'll be live with A1 trading on a Wednesday, and let's have a good week. I'll see you in the trading rooms, and happy trading, lots of profits. See you soon. Thanks, everybody. Take care. Bye.